Now we will discuss Shari'a Standard 13. This is related to Mudaraba. As a normal standards, we'll see what is the objective of the standard, the scope of standard, where it is applied, where it is not applied. We'll see how it is created and what is the responsibilities of Mudarib and what are the different types of Mudarabas. What is the concept of guarantees, what is the liabilities of on the contract, what is the issue date, and when is this is implemented. Let's start our discussion. The scope of the standard is very clear. It is between the institution, it's a contract between the institutions and other entities or individuals. It is also applicable to the joint stock accounts and special purpose investment accounts if these accounts are administered on the basis of Mudaraba. It does not apply, of course, to the Sukuk Mudarabas or the other type of partnerships because there are certain other Sharia compliances and standards applicable on them. Let's discuss the theoretical background. What is Mudaraba? It's a partnership in English. We say there are two partners at least. If we see conventional partnership concept, suppose you are an Islamic educated person and there is an university who want to hire you. If they want to hire you, this is employee relation, it is not Mudaraba. If you and the university start a new venture, they make another entity, this will be a new shape of business and you will agree certain type of partnership terms that who will bring money, who will bring investments, who will take how much share. This is in general in conventional and day-to-day life, we know. So let's see the technical aspects of the standard language. It's a partnership in profit where one party provides capital investments and the other party provides manpower or management. So it's an ideal combination for certain investors. They have money and they need people who are skilled, educated, they can run their businesses. So in that particular case, one party is investing money, the other party is investing the time, energies, mind, entrepreneur skills. This kind of arrangement is called a partnership, and in Islamic way we call this as Mudaraba. Let's talk about agreement on Mudarabas, like what are the terms and conditions, what is permissible, what is not permissible. It is permissible on the basis of general framework of memorandum of understanding to conclude Mudaraba financing contract for a particular sum or money within a particular defined duration, provided that the memorandum of understanding will be later implemented in line with the specific Mudaraba transactions. So it's all depend upon you. If you have agreed clauses, terms and conditions, it is permissible. Then memorandum of understanding should define all the general things. This is the same as when we make laws, when we make contracts. We say I am a contractor, there is a contractee, there is a party 1, party 2. They are agreed on this term and condition against this benefit and rewards. Same way, memorandum of understanding should define the general contractual framework, how things will move. Then in terms of intentions of parties that they want some specific use of these funds, or they want some, they can use it for anywhere. This is unrestricted sort of agreements, which is we have in Mudaraba. For restricted agreements, we have unrestricted, we can use this money anywhere. In terms of contractual obligation, Mudaraba contract is actually concluded on the basis of memorandum of understanding between both parties. The content of memorandum of association is the integral part of the contract. So this is the main document, it's a main framework where you have to be very clear, very precise, and the terms and conditions should be always in accordance to the Shari'a law and standards. You cannot do any business which is not Islamic point of view is legitimate. Like you cannot start making wines, this is not allowed. You cannot do any kind of partnership based on which is in terms of core nature of Islamic principles is not allowed. So it should be allowed, permissible nature of business. For this we can have a partnership between two persons at least. Mudaraba contract is between both parties. It should have a legal capacity, like in English conventional way we say that you should be a major is a term, lawful term, that you should have ability to understand, you have a legal identity. In certain countries this is 18 plus, some countries it is 21 plus. Same way you should have a legal capacity to make this agreement, and you should have you can appoint your agents and accept agency, because Mudaraba contracts not to be concluded in the absence of two contracting parties with absolute legal capacities. General principle is that Mudaraba is not binding. Each of the contracting parties may terminate it unilaterally except in two cases, which is I am going to explain now. First is when the Mudarib is already commenced the business, like he has already started the business. In the case Mudaraba contract become binding up to the date of actual or constructive liquidation. Once a business has been started, there might be some activity and it's not even lawful to close it and remove things. There should be a termination way, so it should not affect the stakeholders in general. When the contracting parties agrees to determine a duration for which the contract will remain in operation, so there should be a time framework. In this case, contract cannot be terminated prior to the end of this period duration, except both parties should agree on this concept of breaking like premature closure of this kind of partnerships. Let's talk about Mudaraba's type. Mudaraba is divided into, as I told you, restricted and unrestricted Mudarabas. Sometimes you have money and you have no clear idea that what you want to do, but you want to do something because idle cash has opportunity cost. So in that case, you are flexible, you are free, you just want to have profit. So you have no specific restriction on the concept that where to invest this kind of investment. In that case, we say Mudaraba unrestricted, and it's a contract in which the capital providers permit the manager or the Mudarib to administer a fund without any restriction. In this case, he has a wide range of trades and services which he can put in himself. And restricted type is opposite. When capital is being granted, it has a specific usage, and Mudarib has to keep himself on this one. In typical language, a restricted Mudaraba contract is a contract in which the capital provider restricts the actions of the Mudarib to a particular location or to a particular type of investment as the capital providers consider appropriate. Let's talk about the concept of guarantee in Mudaraba contracts.